Okay, so picture this. A stock absolutely explodes, surging over 20%. The market is going crazy, and it looks like a total no-brainer, a can't-miss opportunity. But what if? What if the data underneath is telling a completely different story? Today, we're diving into Enphase Energy, a company where the stock chart is screaming buy, while just about every other signal is flashing a big red warning sign. So, which is it? A rocket ship you need to jump on, or a dangerous trap?
Seriously, when you see a stock jump up more than 20% in just a couple of days, your first instinct is probably, wow, I have got to get in on that. It just feels like a sure thing, you know? A chance to ride that incredible wave up. But when it comes to investing, is it ever really that simple? And hey, this isn't just some made-up scenario. This is the real, recent performance for Enphase Energy. A massive 20.33% gain. I mean, that is the kind of number that gets everybody's attention, from the pros on Wall Street to someone just checking their phone. It just screams momentum, success, and opportunity.
Right, but this is where our deep dive really begins, because that huge, flashy green number, that's just the cover of the book. The real story is inside, and as we're about to see, the plot is way, way more complicated than it looks on the surface. So first, let's check in with the experts. You'd think a stock with this kind of surge would have all the analysts singing its praises in unison. But with Enphase, well, Wall Street is completely split.
Just look at this breakdown. It's almost a perfect three-way tie between buy, hold, and sell. Now, this isn't just a little disagreement. This is a total deadlock. When the very people who are paid to figure this stuff out can't agree on which way the stock is headed, that's a huge red flag that something really unusual is going on here.
And this table really shows us why they're so divided. So you've got the PE ratio, which is basically a measure of how expensive the stock is, and it's high, over 66. That tells you investors are expecting some really big growth. But then you look a little deeper. The profit-to-market value and the net income are both negative. To put it simply, despite that high price tag, the company isn't actually profitable right now, and that is the core conflict that has all the experts scratching their heads.
Okay, so the analysts are split, but talk is cheap, right? What are investors actually doing with their cash? Where is the real money flowing? Let's follow the trail and find out.
This number right here is absolutely critical. It's the big money inflow ratio. It tracks what the huge institutions, we're talking hedge funds, big banks, are doing. A score of 1.0 is neutral. Anything above 1 means they're buying more than they're selling. Enphase's score, 0.49. That's right, well below neutral. The smart money is either heading for the exits or just staying far, far away.
So, what about everyday investors? Are they rushing in to buy what looks like a hot stock? Nope. The data shows the exact same story. Their inflow ratio is also 0.49. This is huge. It means this sense of caution is totally widespread. From the biggest players on the street to individual traders, the money is flowing out, not in, which is the complete opposite of what that massive price surge would have you believe.
All right, so we've got divided analysts and money flowing out of the stock. Now for the last and maybe most telling piece of the puzzle, the technical analysis. What story is the stock chart itself trying to tell us?
And wow, the picture here could not be any clearer. We're looking at the balance of technical trading signals over the last 5 days. The number of bullish or positive signals, 0. A big, fat 0. And the number of bearish or negative signals, 7. That is an incredibly lopsided, powerful message coming directly from the chart itself.
Now, you don't need to be a Wall Street pro to get what these signals are saying. For instance, overbought. Think of it like a rubber band that's been stretched way, way too far and is probably about to snap back. Or a long upper shadow on a chart. That means during the day, buyers tried to push the price way up, but sellers immediately came in and just slammed it right back down. All 7 of these signals are telling the exact same story. This upward trend is weak and it's looking exhausted.
So, what on earth are we supposed to do with all of this? It's a total paradox, right? We have a soaring stock price on one side, but on the other, we have divided analysts, money flowing out, and charts that are flashing nothing but warning signs. How do you even begin to make sense of this?
Well, the analysis boils all of this down into a pretty clear 2-step game plan for anyone thinking about investing. First, given all these red flags, the suggestion is to wait for the price to drop or pull back before you even think about buying. And second, keep a very, very close eye on the company's next earnings report. We need to see if the fundamental story, the actual business performance, starts to look any better.
And that really leaves us with the big question at the heart of this entire puzzle. The story of Enphase Energy is just a perfect example of a market where the price is telling you one thing, but all the data underneath is telling you something completely different.
It really forces every one of us to ask, in a world full of conflicting signals, which story do you choose to trust?